Good afternoon, everyone, and welcome to the FX Daily Wrap Up. And we did see quite a bit of movement today here in the market. Obviously, we saw the euro pop up, but I'm going to move to some of the other markets that we did see pretty big moves in. Let's just go and get to those rather quickly. I don't know if I mentioned it in yesterday's Daily Roundup. I could have sworn I did, but I don't remember. But I did mention it in today's European crossover webinar, and that's available for viewing right now, or it has been for about an hour. But we talked about gold yesterday, if you remember, and I told you, I thought, hey, look, I stepped in short and said, hey, look, this thing may really take off. And this morning I had mentioned looking as far as the December futures, looking for this thing to get to around 1527 to 1534 because gold is trading at a $7 premium. December futures, and you can see here, and I was thinking we may just get this pop, and I don't know, maybe sick or whatever. I thought to myself, you know what, wouldn't it make more sense to just go on and just be long ahead of that? Although I was looking to see if I could get in a fill, I didn't get it. Now I'm looking at the spot because I look at the spot at $7. Usually I'll go on and generally I won't have limits working. Unless it's very close, most of the time I just don't feel comfortable with that. I'm close enough. I can go and put in the order. Now if it's somewhere like this, and I'm saying, okay, let me put it. It's $1 away, $2 away, but I don't like to have resting limits sitting there, even if they're, let's say it's gold, it's $5 away. Because what if something happens? And it's already happened to me last week, I think, with crude oil. I made a nice little short trade, and then I forgot to cancel another order. And before you knew it, I got long, and I got long like right at the top. I mean, it was just like pathetic, and I had the opportunity to go in and get out. I think I even mentioned on here, and ended up, there wasn't a big loss, but it was stupid because, like I said, when you make a mistake, just get out. That's it. Get out. Don't try and say, well, if it moves a little bit higher. And but anyway, that's why I don't like to work those orders. Have orders, someone say, well, once you have, it cancels the other one. Look, I'll just monitor it. So I was looking, I thought this morning, I said, but I actually mentioned in the chat room, we'd already done the webinar, but I think the market was here. And I said, hey, look, I'm looking for this market to really pop up, going to, if we do get that week non-farm payroll. Because what I thought was, and we took time into the European crossover, really looking at some of the rates, talking about, not the rates, but just talking about the implications of some of these moves. And I thought to myself, well, hey, look, we were talking about the 10-year yield, and I said, hey, look, I mentioned yesterday, well, I've got some great support at 159.40, and I remember I talking on air here and saying, hey, look, I thought at that point, when we got down there, we're going to bounce up. You're going to see the S&Ps take off, and the S&Ps won't do much of anything. We talked about that. So I thought, hey, look, with this gold, we could really jump up, So I think it was right in here. I said, hey, we might really pop up. I'm thinking by tomorrow, we might get to 1527 or 1534 in the December futures. And of course, the market starts sliding down a little bit further. And I thought, you know what? Why don't I just go and get long ahead of this? If I can get a decent fill, and I was looking here on the spot, and I go, I'll just get long with the futures right there. They came close, and I actually didn't even see them when they got down here because maybe I might have just went and got long. But you can see we're trying, and then all of a sudden the wheels came off the caboose, and we did end up going higher. And that's what I thought yesterday. I thought to myself, even early this morning in Europe, I said, why don't you just go and get long and just be long ahead of it? You know what I mean? Of course, I have to do things the hard way. So I ended up, making some money trying to play it from the short side. Didn't catch any of this kind of move, just jumped in and out twice. Actually missed part of this move, came back in, and then caught it in here, and ended up getting out. And we did still make an additional fallback. And now things have quieted down. But I think I mentioned it here, but the thing is not to give myself any kind of pat on the back or anything like that. But you could kind of see, the thing about trading is every day is always different. You have to be ready to, sometimes you get in those markets where, you're moving backwards and forwards and getting nice volatility back and forth. And some of the other trades are, think about the S&Ps, where a market is just, sitting there. And if this and that happens, then we get that big fall. And you can see this was a decent fall here, and then we rally back up. And if the market tires out and this happens, then maybe, and sure enough, we got that. And we saw some additional follow through this morning, which is what accentuated the move, obviously, in gold. Sent the 10-year yields lower. We'll go to that. And let's go on and move to that. Bear with me. Today's the I'm not feeling great, but I sure feel a heck of a lot better than I've been feeling since the start of the week. So I guess my head's still a little bit in the clouds or something. Hang on a moment. But you can see here, this is one of the things that my doggone it. Okay, yeah. Well, for a minute, I thought I clicked on the wrong chart. So I made the case. I thought it was in here, and I made the case too, but it could be wrong. But I thought I did because I do 2 webinars a day. Obviously, this is a very, very short one. But when we came down here, I thought that 159.40 looked like a freaking champ. I thought, oh man, when that comes down, you wait till that comes down, you're going to see these S&Ps snap back, and it didn't. And that was my concern yesterday. And I was telling y'all, I go, I'd actually played gold from the short side, and I was like, man, this ain't gonna be careful. This thing can really move up. And I thought to myself, we're not finding any bids. We're into good value support. When I say value, as far as volume, and it's not doing anything. That to me portend even lower prices. And obviously we saw that. So that's what I'm saying. One thing leads to another. It's almost like a thing of dominoes. And if you can, one thing about trading is if you can. I'm not a puzzle guy, but if you're good with puzzles, or you can put yourself where you kind of factor different scenarios, it really is conducive to trading. Because like I said, every day is different. It's not the same. I mean, if you're in a market that's going backwards and forwards, back and forwards, then you can play those ranges. But things change just like the same way with crude, the way crude is continuing to fall out of bed. And I actually caught a little bit this morning, and doggone, I sure am glad I didn't hang on to that doggone dog. Because, man, it rolled and we fell again even further. Although one of the things that I was concerned, and I didn't place much focus with crude today, I guess I could have, was because yesterday I thought crude should have fallen even further in light of what was happening with the SPOOs. This morning we did get that finally, a little bit more of an extension move, so to speak. But it still has even been quiet, because when we break to go to new lows, it kind of sit there and just dripping lower. So my focus kind of was more on the gold market and also the currency markets. And we're going to get to that right now. I just want to touch base on those because obviously we saw some big moves. The market, a lot of the guys in the chat room, gals, did very well. Like I said, I've been trying to catch a lot more rest, trying to knock this freaking cold out. So one of those things, couldn't come at a worse time. And I tell you what, my poor throat's been beat up like nobody's business. But I'm on the road to recovery now. Of course, I'm sure I'll be better by the time the bell on Friday rings, and I'll be like, okay, nothing happening. But now I feel fantastic. But anyway, that being said, is my point here now is that I think most of the fireworks are over. And that's what I was saying is now I kind of, have been sleeping even more, usually trying to get in the European morning, but I've been catching naps and even into the early part of the U.S. session, just trying to keep my strength up because I get so tired from being sick. But anyway, that being said, my point being is I think we've already, if you're trying to come in now, don't try and force something. Everything's quiet now. Let me go to the one page. And that was my take on that, not to belabor that. But my point is people that are more seasoned, they're going to know. Well, I can tell you I've made those mistakes myself. I'd be all frustrated. I'd say, okay, now I'm going to come in. And they better move. And I'm just saying, you can see the moves we saw in gold. And now you can see it gets tighter and tighter and the market's quieter. And the same thing with crude oil. We finally saw this market really trip over because you can see here, yesterday, I would have thought yesterday we would have seen a pretty decent move. And we really didn't. And now today, we really saw crude come under pressure. But I'm saying is now, you see the market's gotten real quiet. Don't try and force anything. Like they say, trading is a lot of times like, waiting for a bus. If you miss the bus, just wait longer. Another one will come by. Don't force a trade. That's the worst thing. Believe me. We learn the most from our mistakes. I've made every mistake in the book you can possibly make. And, trying to force something or being upset because you missed something or whatever, don't do it. Just come in the next day, fresh as a daisy, because tomorrow we'll have non-farm payroll. There'll be a lot of room for time for volatility. Just kind of factor everything is moved. Like my take on gold. Remember, I told you I thought we were going to jump up. Now, I thought that was going to be tomorrow. Obviously, the wheels fell off the caboose this morning in equities, and then yields came off, and we got that. This was my thought, and that's what I thought to myself. Boy, that was stupid. I thought to myself, even in Europe, before I went right back to sleep, I said, why don't you just get long? I didn't think it was going to happen today, but I thought, get long and then just ride it when it takes off. Well, I didn't know it was going to happen today, but man, did we rip up. So I think we've already stretched here. I mean, I think Blake was making a good point in face. Unless the number just comes really way god awful, I think we're probably going to be well contained within what has happened from yesterday into today. And I would say the same thing in light of where we are with gold. So don't try and force anything. Look for the next best setup. So this is a good example right here. We were talking about that, and yesterday I'd been playing it, thinking, okay. Well, actually, if you remember at the beginning of the week, I was saying, hey, I think this is going to see a nice, decent buy. Well, I didn't know it was going to come rally that much, but we did. We did. And then I said, oh, well, we're really overdone. Let me try and play it from the short side. And fortunately, I was able to get out. But as I thought about it, and I said, wait a minute, the way this thing is going, we could see a pretty good move in gold. Out of nowhere, because, what could happen with equities and interest rates. I didn't think interest rates would fall this far. So we saw that. So quite often, lots of times, you as a trader, you want to, you do that. You're trading across various markets. You don't want to be trying to trade everything across the board, but they'll kind of pay the bills over the short haul, and then every now and then, you get these I don't want to call them events, but where a market kind of sets itself up, and you can make yourself a nice bit of change. Even if you miss that move, you're still able to profit, which I caught some of this in here backwards and forwards. I didn't hang on too long because I thought, well, it's still, rather bullish, but I don't know that we're going to set a new leg at all. The best we could possibly hope is, I think, would be to take out this hype by just a little bit, and then we'll probably fade back in. But the point is that when you do miss a trade, don't try and force anything. Like I said, just reassess. Obviously, we've seen a huge move in SPOs. We talked about that being careful yesterday, is that people trying to pick this thing up and would probably may go against them. And we dipped a little bit further, and then we started coming back, and obviously we came down, and we probably flushed out a lot of people. So now the market, if tomorrow the numbers really going to have to be really terrible for us to come back and make new lows again. Doesn't mean it can't happen, but most of the selling's all been done. And Blake made a good point with the U.S.-China talks towards the end of next week. The market's probably going to have, people are going to say, I don't think it'll happen, but I'll wait to sell it from up here. You see what I'm saying? So once again, just wait for the next setups, and you probably have, follow a handful of markets that may present some of those other opportunities. Those might be in FX. And I'll just touch base on those, and then we'll skedaddle out of here. Bear with me. So just like yesterday, as opposed to the analysis, I just started trying to share a couple of things that might be helpful. Obviously not to more seasoned or traders, but if someone's new and to trading, maybe kind of helps. And we all make mistakes. I've made my share of mistakes. It's always helpful when some people do share the mistakes that they've made, because sometimes you hear people talking about all the trades, wins that they make, and you think, wow, I guess I'm the only one that has losses or something. And that's not the case. And it's helpful when people can share. It helps you to say, to identify and hopefully keep you from making some of the mistakes that we've already made. We're also going to continue to make some mistakes. But anyway, that being said, we did see just an unbelievable run up here in the dollar CAD, and we'll probably wrap up with that. Here's one that, some people had some tough times with this market here. We've been sitting in here trading in this range, and look at this. It looked like it's about ready to fall apart. Even here, we saw this market rally one more last time and finish on its lows practically. And then yesterday, we just turned everything around and ran over a lot of people. And, now the key thing is we got to get a daily close above 33.36. It's still bullish, but the market needs a daily close above 33.36 to ignite for the next upside leg. So really, that's what I'm saying. Quite often, I like to combine, fundamental factors, and it helps you set up on trades. But obviously, these markets, to manage your risk, you need to use the technicals. So that's where we are on the dollar CAD. Dollar peso, we're finally pairing back. We had been looking for around 1982. Yesterday, we had moved it up to 1987. We made it up to almost 87, and we've come back. And now we're looking. Today we're looking at I think it was 1968 and 1958. So actually looks like we made it to 1968 on the bias chart. Bear with me. Yeah, 1968. Yeah. So yes, we did. This was the number we had. We actually been looking around 82-ish. We gave it a little bit of extra room. It didn't quite make it 87.5, and we're looking for this market to just pair back. But it's done very, very well. We kept it on a bull bias, even though the market was really low, because I thought it when we had broken above that 1923.6, that was just so huge that as long as we could hold the 61%, which it did, that would allow for this market to come back. We've made a pretty nice run up here. Here's that 1987.5 right there. You can see that. Dollar yen, holy smokes, this thing really did a round trip trade on this one. As we rallied back up, boy, did we come under some quite a bit of pressure. Obviously, the yen is a safe haven currency, so as the equities came under pressure, that you saw this pair really, come down, and boy, we've really pushed them. Potentially, we'll still go even lower, but I think that's for the medium term. Once again, we're a little bit oversold unless we get a horrible, horrible number. Although I think the upside would be rather limited, but I wouldn't be trying to push too much any further here on the downside at this moment if you are not already short here. So there we go. And lastly, we'll finish up with the cash dollar index. I think today, let me see what we had. Oh, we had 98.58. Okay, so I had mentioned in the room there was some support here at 74. You see here, market overshot a little bit, but we actually had a buy support at 98.58. Potentially, I think that it's going to be 58 and then down here to 20. But we shall see what happens. But that's all we got. Good luck. Tomorrow's NFP. And once again, like I said, most of the fireworks are out today. So we don't even be trying to force something, really, regardless of whatever market you're in, because at this time of the day, most traders are going to sit back and wait and get ready for the next, day, which is tomorrow non-farm payroll. So good luck, and thanks for joining us here on the FX Daily Wrap-Up.